it's Greg Watson here with a bit of a roundup of the last week in real estate, and underpinning some of what's going to happen and likely to happen in the near future is around the OCR and what's happening in the wider economy. The OCR rate has stayed at 1.75%, and that's likely to mean that lending will stay at a fairly low percentage for some time to come. However, there are still supply and demand issues which the Reserve Bank Governor has mentioned around, in particular, things like the fact that we've got positive migration, we need to be building more, there's pressure on the rentals and sales markets. It's just not where it was, but he was hinting that the rates may go up, although that will happen probably slowly and maybe later this year, in my opinion. So looking at rental properties, a couple of articles. One is interesting, is that they are saying that not only is New Zealand's rental market being affected by positive migration, as it certainly is here in the Manawatu and in a number of other areas, Wellington, Auckland, etc., but also that Airbnb has something to play with it in this bigger picture. So as it says there, anecdotal accounts suggest that the short-term sites are actually, they're converting some of these other properties across into Airbnbs. So that's in areas where there's more tourism and that sort of thing. But they're saying it is a factor, and it certainly has been in other centres, like in London, for example. It's quite a major. Now, I don't think it will have much difference. One thing that's interesting to watch in this space is what insurance companies are going to do about methamphetamine, because that's something where, at the moment, some insurance companies are wanting methamphetamine tests between tenancies under normal tenancy situations. So what's going to happen with Airbnb or short-term rentals, we'll have to wait and see, but if you have one, check with your insurance company. So here's a highlight from, headline I should say, from interest.co.nz, saying that residential rents are still rising, but the rate they're rising has dropped. Now, again, this is a national commentary, so it is affected by Auckland, where the prices have come back a bit. But it's also interesting that Wellington, that I've been talking about in recent weeks, has gone up around 6.3% in the last year. So it's not actually as dramatic as I thought it would be, given those incredible media stories about supply and demand. But just for interest's sake, here's some figures. I tend to focus on the Manawatu. So Palmerston North City, we have average rent over the last quarter of 2017 of $327 per week, still very affordable. It's only gone up 2.5% compared to 6.3% the year before, but it's still moving up, moving in the right direction, you could say. So what is Wellington doing to ease some of these issues with the rental market? There's a number of office conversions that are actually happening, where they're converting offices to rental accommodation. Quite interesting. I haven't done the maths on how that works out, but people in the know probably have done so, and figuring out that the headline is saying some commercial landlords are converting office blocks into apartments, and that's where it's interesting, because the office vacancy rates are actually fairly low in Wellington anyway, so there must be some money in it, and just a response to I guess the pressure on the market down there. And the final article of interest from last week was a article that was on stuff about regulation and cost pushing landlords out of the market, according to a property manager at Oxygen Property Management, or the general manager, I should say. They're saying that they're losing properties to landlords who are just finding the compliance and all the extra costs a bit tough. And that includes things like the current Healthy Homes Guarantee Bill, some of the recent court rulings in favour of renters, the added costs like methamphetamine tests for insurance companies and so forth, insulation costs and so on. So what is actually happening there, and going back to the original OCR related article, is that pressure's coming off the housing market. But let's actually think about what's happening here. If landlords are dropping out of the market, and the commentator from Oxygen has said that they've lost 10% of their rental stock over a period of time, what happens to those rental properties? At the moment, there's already a demand for rental properties, but those are possibly being purchased by first home buyers. And while that helps ease some of the the housing market, it doesn't actually help with the rental market. In fact, that coupled with if Airbnb's having an impact and all of those other factors, the rents, if anything, will be going up. So unfortunately, the regulation and the costs, meaning that properties are selling, means that rents go up. It's a difficult one for the government to manage, and some landlords are dropping out, but let's face it, property is still a good investment, generally speaking, and it just means that you need to plan a little bit more for some of these costs and to be informed when purchasing. So thanks for watching, and we'll see you next time.